Hey Bitcoiners, Lockie here from Edge 21. Bitcoin has taken the financial world by storm yet again. With a market cap soaring past $2 trillion, it's now the 7th largest asset on the planet. But will it hold this level, or are we about to see a major price shift? Today, we break down exactly what's fueling Bitcoin's price moves, the short-term trends, and where it's likely headed next. Get ready for exclusive data, expert insights, and key charts that you won't hear anywhere else. Let's dive in. First, let's talk numbers, because the facts don't lie. Right now, Bitcoin is holding strong at 102K to 103K, but has had some wild swings between 97K and 105K over the past few days. What's driving this? Let's break it down. Since the FTX collapse, Bitcoin's realized cap, a key measure of true market strength, has skyrocketed 110%, absorbing $442 billion in fresh capital. That's huge, and it tells us Bitcoin is stronger than ever. Now here's where things get interesting. Bitcoin ETFs, like BlackRock's iShares Bitcoin Trust, have already seen $40 billion in inflows, but to push BTC beyond 150K, those inflows need to at least double. And let's not forget long-term holders. They've been selling into strength, creating resistance around the 103 to 105K range. That's why Bitcoin has struggled to break out. But the fact that we keep bouncing back above 100K is a strong sign of buying support. So where do we go from here? Let's look at history via the Bitcoin Index performance since cycle low chart from Check on Chain. Bitcoin follows repeatable cycles, and when we compare today's price action to previous cycles, here's what we see. For the 2015 to 2017 cycle, Bitcoin's realized cap grew 21 times. For the 2020 to 2021 cycle, it grew 4.6x. Our current 2023 to 2025 cycle, we're currently only up 2.1x so far. Translation: Bitcoin still has room to run before this cycle is over. Now let's talk short-term price targets with some analysis courtesy of Check on Chain. If Bitcoin repeats 2021's pattern, we could hit $312,000. If it mirrors 2017, we'd be looking at $1.7 million BTC, but that would need a $10.5 trillion capital injection, which is unlikely to happen anytime soon. A more realistic target is 150K by mid-2025, but to get there, we need $250 to $333 billion in new capital inflows. A challenge, but not impossible. Now let's check liquidity conditions, because Bitcoin thrives when money flows into markets. When the Federal Reserve prints money, Bitcoin pumps. When liquidity dries up, Bitcoin stalls or corrects. And what about the biggest players? Institutions like MicroStrategy and BlackRock have massively increased their holdings, proving Bitcoin is no longer just a retail game. Institutions are here to stay. So what's the bottom line? Bitcoin is in a strong position, but for it to reach new highs, it needs more fuel. And that fuel is capital inflows. Will we hit 150K in 2025? The data suggests it's possible, but only if institutional demand keeps growing. Want to stay ahead of the curve? Smash that like button, subscribe for real-time Bitcoin updates, and drop a comment below. Where do you think Bitcoin's price is headed next? Don't forget to check out edge21.co, where you'll find personalized content, including trending tweets, Noster notes, videos, articles, and price analysis about Bitcoin. Thanks for watching, stay strong, and hodl on.